Tell me while we're waiting, who has heard of angel investing? And what do you think they are angels, or do you think?
I think they're mad.
Okay, Gabby thinks they're mad.
It's the definition of angel. I think is it Hell's angel or a good angel?
Good angel, bad angel. Yeah.
Bad comfort, bad.
It's an unfortunate name, and rarely are they true angels. Sometimes when your back is against the wall, they are an angel. But the majority of times they're an investor looking for a return. So if you treat them as an investor looking for a return, you've got a better chance of developing a relationship than if you treat them as an angel or a charitable body, because that's what they aren't. And so what we're going to talk about a little bit here is some of the profiles of these people, because it's very important to understand that. And in Ireland, this community is growing rapidly. 10 years ago, there really wasn't much in the way. There was a bit of higher net worth individuals who wanted to invest in companies. 20 years ago, it was very low, and 30 years ago, it really didn't exist at all. So what has happened with the increase in wealth of the country and the increasing entrepreneurialism of the country, that this group has formed and has become active. Just in the same way as in the United States, a more mature market, we have a situation where angels are very active. So I'll talk a little bit about that in a moment. So I'm Michael O'Connor. I'm from the BIC in Cork. We started about 25 years ago, before my time, and we're essentially a specialist venture consultancy working with early stage companies. We do two things. We identify them very early on. We try to pick the winners of that group. We then advise them. There are various programs in Cork that can benefit these companies, these individuals very early on. Some take multiple rounds. Peter Finnegan is here from New Frontiers, as an example. There's another in Ignite in UCC. And these actually bring on the companies at a very early stage, and such that they get closer and closer to being able to raise the funding. We then take them to a role where they actually try to bring them to an investor-ready level. And there are probably in Cork and Limerick and this area, there's probably about 15 companies a year that come through that route. And so they are investable. We then take them to, once they get an investor-ready level, we take them to either the VC community or the angel community to try and raise those funds. On the other side, we have Enterprise Ireland, who is a funder of these companies also. So typical deal they get, the average deal size is about 400 grand. And typically there might be 100 to 200K of Enterprise Ireland money, and the balance will be VC, angel, or friends and family. Now that number, 400 grand, could be 200 grand, or it could be 1.3 million, depending on the valuation, the needs of the company, and a whole variety of other things. Can you all hear at the back? Sorry. So the projects are essentially risk-based. And they're usually fairly strategic. Like some of the companies we would have worked with very early stage would be Attain, where we wrote the initial business plan for Attain that was funded by the enterprise boards. And now Attain employ 1,500 people out of the west side of Cork. So this is going, and so typically we work with probably 30, 40 companies, sometimes 50 per year. And about 15 of those go through the route. Some of them come back for a second try. But what we try to do is to avoid a company going down a road where it is going to fail. And that's on the now sometimes failure is very good, but quite often it can actually take other things with it and actually damage the ability of that entrepreneur to start again. And other times it can be very good because it can be a great learning experience. The game is to do it without costing a lot of money. So we've done about 300 startups. The survival rate after 5 years with those startups, is just an arbitrary number, is about 85%. That's consistent over the 25 years. What we're really interested in is not the survival rate, but the ability to grow. And about a third to half of those really grow, which is kind of interesting. In the category of startups, there's a term in Enterprise Ireland called HPSU, High Performing Startup Company. It's a bit of jargon. But what it means is a startup funded by the private sector, VCs or business angels, and sometimes Enterprise Ireland, and it has initial financial capacity to get going and create potentially up to 10 jobs. And in the last 3 years, we would have worked, again, this is not just Cork, Limerick, Kerry area, we would have worked with about 47 of these HPSUs. There's typically about 95 to 100 reaching this level per year in Ireland at the moment. 3 years ago, it was about 70. So this area is growing rapidly. And in that, for those companies, we would have raised about 22 million in the last 3 years between angel and VC funding. So it gives you a little bit of idea of the... So some of the things over the years, there would have been the Genesis program that we would have been involved in, Atlantic University Alliance, the Software Centre in Cork. So these are infrastructure projects around developing and helping to develop the infrastructure for startup companies to operate in this region. Founding IT at Cork, Seed Capital lobby to get the BES, now EIAS legislation changed to make it more investor friendly. And we achieved that by getting the levels of tax relief funded or granted by the Department of Finance from about 30 grand to 150 grand per year. And we were partially successful in getting the capital gains tax in the last budget reduced for seed companies. But there's a lot more to be done there, a lot more to be done. And currently in seed capital, the return to an investor in Ireland is a lot less than in the UK. So we have a lot more to do in that space. And in the recent times, it's the Business Angels Partnership, as we call it. And this does about 30 or 40 deals a year in Ireland. We do about 10 to 15 of those, depending on the year. And to date, in the last 5 years, we would have done in the Cork area, Cork-Limerick area, because that area is very, very wide. We would have done about 40 deals, and nationally about 130. So the average deal size again is about 400K, and typically there might be 1 to 4 investors in that. So we're talking about loose syndication of investment, and it's all at risk. This is risk big time. So it's startups, but it also has it can have some spectacular returns. So what we do is to encourage an angel or an investor to build a portfolio. So it's not to take the money and put it all in one company and try and pick that winner, because it isn't. I don't believe it's possible. What one can do is to work out which half of the group that's selected that you think will work, and then invest selectively in that. And do that on a portfolio basis, 5 to 10 investments, and also to then build that over time so it doesn't take too much time. One critical thing, so what we have now is probably a group of about 300-400 investors in Ireland who've worked with us over time. There's probably about 100-150 in this region. They're all private, they're below the radar, and here we have Ted Foley from our own Business Angels Partnership, who is running that in the Cork area for us. So raising finance, you've got 2 ways to go. Or you've got 5 ways to go. But some other seminars in this series will cover the other elements. But it's important. Finance is cash. And so you have, I'll start at the bottom, banks and loans. Typically loans are secured, so it's quite difficult. There is very little unsecured lending out there. So then that is only for certain types of projects, usually not the startup, unless there's a little bit of collateral financing. We have vendors. People don't think about that in building into their business model how a customer or a supplier can be a source of finance by changing the payment profile. And in some markets, many of our startups don't try and don't ask. So as a result of that, they get stuck with businesses that actually consume cash rather than getting some of the partners in the business, either customers or suppliers, to actually fund that business by giving more advantageous credit terms. And it does exist. Give an example. You could be shipping a product to somebody, it could be worth 30 grand, and you could ask for a 30% prepayment. And in some markets that aren't so brutally competitive, they would give that to you. And you can build an argument about getting the 30%. You're going to ship something in advance, do some training, do something to actually generate that invoice. And so you can actually pre-fund the business. Some builders are doing that now, being wise after the recession. The other is grants and new projects, and that's for the next session of this, and there's some very qualified speakers in that space. And then there's finally the last two. Grants and new projects will only cover the very, very early risk stages. They generally won't go into the venture capital or the business angel area. And where a state agency such as Enterprise Ireland invests in the startup, the business angel area or the VC area, it is typically as an investment. So remember, the state agency moves from offering a grant for the very early stage, very, very early stage, try the idea out, to the investment level, and they become an investor, and they act like an investor. So that money goes in, a return is expected. They're not as brutal as some of the private investors, and their outlook is towards how many jobs are going to be created and will this business sustain. The investor is looking at it from how many will this business sustain, what is my return on capital employed, and secondly, which we don't always think about, what is my return in time? So increasingly investors are coming to us and saying, look, I want to know how much time this is going to take up. Because some of these businesses don't go entirely right, and so they become a burden on either the VC or on the investor, the private investor, for governance and a whole variety of things. So they start running the business on an, albeit 2 or 3 days a month. That takes up a lot of time, it has a cost, and it's not sustainable in the long term. So this is what we've got. We've got VCs, and Gavin has done a very eloquent description of the investment community in Ireland and how that works. And we also have an offshoot of that, which is business angels. Now, Ireland is only 5 years into this business angel investing area, and there are more and more savvy investment groups being developed. Some of them operate as groups, some of them operate as formal syndicates, and some of them are just individuals. Most want to be private simply because the deal might not work. And if the deal doesn't work, they accept it's going to be at risk. They don't want to be talked about in the golf club or in the locker room about who lost money. So they prefer to be private. If it doesn't work, they walk away. And so they're often not attainable, and often they're not the people you think they are, which is very interesting. There's a lot of wealth out there, but it's not where you think it is. And if you talk to the banks would say that there's a lot of money on deposit, not knowing where to go. But it doesn't always go here, because this is for a very special type of individual, and typically the average investor via the business angel network is rarely a property developer, it's rarely inherited wealth, it's rarely lottery winnings, and it's usually somebody who's been in the coalface with an early stage business and built it up the hard way, any sector, and actually is now generating a lot of cash, or has managed to sell it, or has managed to do that a couple of times. So they don't take all of their wealth and put it into this, they take a portion of it. And they put it in because they have some sense of what type of person makes a good entrepreneur, and what type of business is capable of growing and generating an exit. So back to what Gavin was saying a little bit earlier on, the characteristics to do this are: what is the character of the individual? Are they capable of doing it? And can I build the trust with that individual? That's a key requirement, so the person. Secondly then, in the market, can this person, or through other people, build the momentum? and to actually grow this business? And thirdly, what is the potential exit? Is there enough growth or things happening in this market to make what I've got exitable? If there's no exit, the deal is dead. There has to be the belief that there is an exit out of this. And there's all sorts of ways in which that can be created. So I think it's worth looking at that. And also there are some exciting things happening out there that are outside the mold of this. I'll give you an example before we finish and pass on to Denise. A client of ours in Dublin who started, and his product is like a Facebook of music. So basically through the web, he can listen to people register with him, he can listen to who's listening to what where, and he can mine that and then sell that to record companies and event hosting organizations. So he tried to raise some money in Dublin, and ACT Venture Capital decided to put 700 grand into it. It was a decision they took. He was delighted. But he said, can I, and they were living in Dublin above the whitewash laundrette in Barrow Street, down around the corner from Google. So this is the Wild West of Dublin. And he said, okay, to ACT Venture Capital, can I try and get 200 grand of that through private investors, angels, and would you still do pro rata on the 500 grand? And he said, I think he wouldn't stand a chance because he's built a business, a proper business, he'd done other things before. And so he got an email to the United States through LinkedIn and various other things. I found 3 very high net worth VCs in the US, top VC firms, and to the individuals in that he targeted an email. And they came back within a couple of days, a couple of questions, and they said, yeah, we're in. So he raised 200 grand via email, no phone calls, from top guys in the US that many people in this country have been trying to call for 10 years. And the deal was closed, no phone calls. 200 grand, 3 top investors, email. They followed, obviously, the due diligence of ACT Venture Capital. So all things are part, we didn't think that was possible. But yes, it is. So the world is changing, so you've got to kind of take your head out of the box and think that a little bit. So what I'd like to introduce now is Denise O'Callaghan Delicious, who will tell us her story. It's a very interesting one because we can all relate to it. It's very recent, and Denise has been a classic entrepreneur within the food sector. And the food sector is very interesting because the entry costs are lower. It's a bit easier to do, but you can get market scale quickly, and with that market scale, you get cash generation rather than some of the high-tech stuff where you don't see cash for a very long time. So Denise.